Hi, I'm Eric Pratum. Welcome to the Unfolding Thought Podcast, the show for leaders and deep thinkers who demand more than the usual fluff. If you're the kind of person who moves on from a book, video, or podcast the moment it stops making you think or introducing you to something you can use, I hope you'll feel right at home here. In each episode, we uncover the deeper, often overlooked forces that shape our thoughts and behaviors so you can see yourself, your team, and the world from a whole new angle, and then actually apply what you learn to grow and do better. On the Unfolding Thought Podcast, we aim for minimal filler and maximum insight, challenging assumptions and sparking new thinking every step of the way. Are you ready to dive deeper? Then let's get started. Today, I'm speaking with Hugh Massie from the company DNA Behavior. Hugh has devoted decades to understanding how our hardwired behavior influences our lives and work. We talk about his journey and about the work of his company, which I will say right now fascinates me and is well in line with the discussions with and interests of several of my recent guests. I hope that you will be equally as intrigued by Hugh as I was. And now, I bring you Hugh Massie. Hugh, thank you for joining me. Would you mind telling me a little bit about yourself?
Yeah, so it's great to be with you, Eric. The first thing is for all the listeners, I'm not from Atlanta, Georgia, although that's where I live. I originally came from Sydney, Australia. So I've been in the United States 20 plus years. Haven't, I don't think, picked up the accent yet, but it's sort of in a way of describing me or thinking of me and connecting to my journey. Think of it as that I'm a reformed accountant. And my university degree at the University of New South Wales in Sydney, I did accountancy and economics. And then I left. When I finished with that, I went and worked in Arthur Andersen and became a chartered accountant. In my 10-year journey there, I was mainly a tax specialist for most of it. For 9 of the 10 years, I was in the tax area. So that's sort of why I say I'm an accountant. I was pretty much rational thinker, all about the bottom line, all about results, what the numbers said. That was the only thing in a lot of ways that mattered for quite a lot of that journey. And, I was always interested in business, doing deals. So I had things going on the side from the moment I left university, whether it was some sort of property project, trading in the stock market, underwriting contracts, whatever it was that I could lay my hands on, I was somewhat into it. And at about age 30, I suppose I came to that watershed moment. Do I stay where I am at Arthur Andersen, become a partner, and spend the next 10 years or so doing that to justify going through that? Or do I leave? And I looked at it and I sort of thought, the people above me aren't that happy. That was a telltale sign. I think I wasn't as passionate about what I was doing. And I just had this itchy feeling that I was not in the right place for Hugh for a whole lot of reasons, and including psychologically, what I would now call psychological safety. I don't think I knew that term then, but I knew I wasn't going to flourish maybe the way I could, but I didn't know what I was going to. So, but I always had this one thing in my head was, Eric, I wanted to provide a hyper-personalized experience for investors. And so once I left Arthur Andersen and I dusted myself off a little bit, a few months later, I formed a wealth management business serving, wealthy families, high net worth executives, etc. And the goal was to provide a hyper-personalized experience, sort of putting a tailor-made suit on every person, treating them uniquely, understanding the family differences. Now, that was not in the 1990s, late 90s, something that people really talked about, because private bankers, a lot of it was just, a one-size-fits-all approach. Today, it still is, even though there's a bit more rhetoric around that. And we're moving towards hyper-personalization, but we're not completely there yet. I think technology is what allows us to do it. And then about 4 years or so into my journey of having this wealth management business, a friend of mine asked me at breakfast one morning on a Saturday morning, Hugh, you don't seem that happy with what you're doing. What are you really passionate about? And out came out of my mouth, well, I want to help people all over the world become financially self-empowered. And I'd never said any statement like that, certainly not clearly. And it rocked me a fair bit. And I thought, well, what in the earth does that mean? And I knew enough that if I'd said that and that had come from my subconscious, I need to go and reflect on it more and work out, how do I do that? Because that's maybe what I'm meant to do in the world. And I knew this was not about financial literacy in the sense of teaching people stocks and bonds and what's the stock market, how does it work? And in a way, the basics, but they're also very important fundamentals. I came up with, it was about teaching people about themselves. And that what I realized was that every person had a financial personality that drove their decision-making, partly coming from their natural hardwired behavior, from early in life experiences and from learned behaviors. And that also people who create wealth usually create it from their talents, not outright from investing. Now, for some people, it's the same thing if you're a fund manager. But for a lot of people, they're going to make their wealth from their work, and investing is a byproduct. So I knew I had to understand people's talents, but I also needed to understand how they made financial choices. And lo and behold, I had a young staffer in my office by chance, and she was doing accounting work for us, but also she was studying psychology at university and accounting. So she was doing a sort of pretty interesting double degree. And I asked her, I said, Marta, go and research ABCD, psychometric systems, risk profiling tools. Let's see what we come up with. And I also looked in my day journal, Eric, and I've been writing about this stuff for a few years, and I didn't realize I was. So this was underneath the surface for me. And she didn't sort of come up with the conclusion, but she brought out enough that showed me I like all these things. And then I had a chance meeting with Carol, who was on my team until last year for 24 years or 23 years. And she thought she was coming to see me about hiring people, which a little bit it was, but we started talking about natural hardwired behavior. The thing is that what I noticed with clients was under pressure, there was this behavioral flip, and that people, when they're under pressure, were reverting back to more their instinctive behavior. And I thought, I need to know that. I need to understand how they're behaving under stress. I need to understand what causes them stress. It's always money and it's relationships, but often those two things go together too. And I said, so Carol, can we measure this? And she said, you can, and I'll help you get a system built, but you need to meet these guys in Atlanta who can help with psychometrics, and I'll help you build the rest of what you need. So a journey started. I came to Atlanta every month for 4 years from about 2 weeks after that meeting. And that led to the birth of DNA Behavior. We used the systems with our clients in Australia. And then I realized, my calling in life, I think, which is important to this conversation, my calling in life was not being people's investment manager. It was helping them understand their behavior, their financial mind, putting measurement to that. Because if you put measurement to it, you can see it. You can do something with it, and building technology so it could become a global business. Because the other thing that was important in this was moving from Australia to America is a big thing. Just even traveling across all the time is a big thing. What am I supposed to be doing? And I came back through meditation to my boyhood dreams. I wanted a global business to have impact. That wasn't going to happen in wealth management, but technology could allow me to do it. Technology wasn't in 2001 and 2002. I don't think it's definitely not what it is today, but I could see what was going to happen enough that I needed to go down this track. And so I did. And now, 20 years later, I'm talking to you.
Thank you, Hugh. I appreciate that. And there's a lot
of things in there.
Yeah, there's so much in there that I want to dig into, and there won't be enough time, unfortunately, but I think that's good because you're not just going to hopefully leave the listener, but also me, you're going to leave me wanting more. I can already tell. So thank you. As I understand it or am assuming at the moment. It seems like when you started down this path of psychometric testing, or dare I say, understanding behavior at the risk of being too vague, I suspect that one of the next steps was thinking about your clients' responses to you or responses to the market. And then you took further steps to take this from being a wealth manager to being DNA behavior over time.
Yeah, well, that's a very good question, because I'm going to say something today, perhaps that I've not really ever said or don't regularly say. I think I've hardly ever said it. When I figured out that I was going to leave Arthur Andersen, which was about 6 months before I did, there was a seminal conversation that went on there that I don't need to share the details of, but I said, I'm gone. And then I had to figure out what I was going to do. And even after 6 months, I didn't figure it out, but I thought, okay, I just need to tell them and go. It's fair to everybody. But I did go and interview to work at an investment bank, and they psychometrically tested me and cognitive tests and all that sort of stuff. But the whole process was very badly handled, because I turned up at an office to do the test. I was told you only need to allow 45 minutes. In fact, it was 4 hours. Well, I'm sitting there not understanding that, and I've got clients waiting for me at Arthur Andersen, and I can't get out of this room. Anyway, I do it, and I'm in trouble when I get back to the office, understandably, only because I couldn't manage time. But then I'm sitting there getting debriefed or asked questions in the interview, and they're saying this about me and A, B, C, D, and I'm thinking, but I don't even know what you're reading that off. I can't see it. And I asked to have a look. Oh, no, we're not going to give that to you. And I thought, okay, this is wrong. And so I just refused to go further in that kind of interviewing and testing with those types of people. That ultimately was the catalyst for me just to work by myself and find my own path. And then, the 4 or so years later, when I got onto the idea of psychometric testing, I thought, not everybody's going to want to be measured. And so therefore, and certainly it can't be a secret. The key point was it needs to be transparent. So what I did in the wealth management business when we started to go down this track was that I would show the clients my profile reports. This is Hugh. This is the strengths and struggles I bring to the table. This is why I can help you in this situation. This is my team. This is what they're going to do. And therefore, would you like to complete the assessments? And, out of 100 or so clients at the time, everybody bar one completed them. And it's because I showed myself first. I was authentic about it. And then the conversations with the clients then became fairly interesting. They complete it. Husband and wives would complete it. They'd trade notes. Okay, now I understand why there's spending going on here, or your entrepreneurial drive, or whatever it was. It was generally a fun conversation. But the key thing was, and what I sought to do was to change the culture in how psychometric assessments were delivered by there being open sharing. And the same goes in the hiring scenario when these are used in business for more business settings. The person going through the process must at least see their reports and what it's saying about them. And so, anybody that works with us in any way, whether it's clients, suppliers, whoever we put through the process, we always send them our results, with theirs together, so that at least they can see it. And that creates Eric, a level playing pitch for that conversation. No one's got more information than the other person, and removes the risks of manipulation or people thinking, what's going on here. So that's been the big cultural shift. I think that, when I started doing this, it was very strongly around people's financial personality, that what we call their financial DNA. That was a market niche that I saw we could conquer with this, because I knew there was already Myers-Briggs and DISC and other tools in the market. They were very fragmented then. It's still very fragmented today. That's another issue. But here's an area where I could be unique. And I think with, while I've got a business mind, I figured out that was something that was important. If you're going to do something like this, try and own a corner of the market. Doesn't matter how big. And, and now I know more about business, and you want to find a market channel that you can conquer and be the king of. There's a concept called play bigger. a really good book around that, or a book called Building Champions. Don't start a market channel unless it's worth 100 million and you can be number one player in it. So that's what I did. But I soon started realizing, working with a lot of the wealth managers, once I'd moved this beyond my own wealth management business, once I started, providing a subscription service to wealth managers, they not only wanted to understand clients, but we also realized for them to be better at that, they needed to understand their own team. Who is the right person to work with who? So not only in a team, but also with the clients. I knew in my practice that Hugh was good with certain types of clients, but there was a whole bucket of them that I wasn't the best with interpersonally. I might be the brain they wanted, but interpersonally, which is part of building the trust, you need people that make you naturally feel comfortable. And so we figured all those things out. And then, so in a way, Eric, financial DNA was birthed, but not long after business DNA was birthed. And the two work together. You really, and for some businesses, they just wanted to do the business DNA part, not the client, the financial DNA with clients. Others wanted to do the financial DNA with clients, less on team. It was a mixture. And over time, more people started to find out we had business DNA, and that led us to doing work in non-financial services businesses, in all sorts of organizations. And so really the business is growing on that.
With the models or approaches, assessments, any number of other things that you've developed, I guess, what do those look like? Have you integrated other assessments that are out there, such as you mentioned DISC or Myers-Briggs? Have you developed your own models, if I can use that word?
So we built our own psychometric model. And one of the reasons was when I did the research with Marta, who I mentioned before, and then really it became Carol, was that a lot of the assessments at that time were built on what's called Likert scoring. So to ask a question and rank it 1 to 5, get scored. Do that 25, 40 times, 100 times in some systems, 1 to 5, 1 to 7. Well, your answers to those situational-based questions, because that's how they are, change. So that's not measuring natural hardwired behavior that's instinctive. That's measuring learned behavior, your preference today. What I wanted to know is how are you going to instinctively respond? And so that's got to remove situational bias. So where we came to was what's known as a forced choice scoring model, where people choose between 3 words, let's say aspiring, patient, and detailed. I might say I'm all 3 of those. Well, I can be on certain days, but most of the time I'd be aspiring, then detailed, and patient is sort of at the bottom when I need to be, right? And so you do that enough times. One that doesn't take much thinking with those types of questions, and they're not situational, and therefore you get a very consistent result. Long time gaps, different pressure situations. And that's what we've tested over the past, 25 years. And I don't think there's anybody who's marked us down for accuracy. So it's a different approach to it. There are some other systems now that do it, but it's on the rarer end of systems that profile people with that approach. But it was very specific to get to natural hardwired behavior. When we want to ask situational questions, let's say, how do you build a quality life, or what's your leadership performance? We'll always have someone do the natural hardwired behavior questions first, the natural behavior questions first. And then we have them do a second set with a different scoring format. And that's been the methodology that we've adopted to get the maximum accuracy in the outcomes. That's been our historical approach, Eric, to that.
And the use cases, or I suppose desires of your clients, are things like, I want to understand my clients as a wealth manager, for example. I want to understand my clients' financial behavior, or how they're going to act when times are stressful around money and finances, as well as whether I am a wealth manager or any other business, because as you said, you've expanded into other industries or verticals. A use case for me, or a desire, is to hire certain types of people or the right kind of people or to understand them. And then also, I suppose, to understand the people that I already have, so that I think I encountered this maybe on your website or LinkedIn profile, so that we can engender or have behavior that makes money fundamentally.
You've got it right. So let's say you take the hiring. The key thing to understand is what talents are needed for the role. Well, you need to look at the team, what the team's doing, what its mission is, who do you need, and what talents do you need on a team to fulfill that mission, and what talents have you already got in the people. That's the first thing. And you might find that you actually, okay, I want to hire for this type of customer support role, and I've actually got somebody who'd be good at that already on the team, but they're out of place because they're doing accounting or they're doing something in marketing. They could be switched. So that's the first thing I think to work out before you go down the wrong track. And then when you figure out where the gap is, that's who you hire for. But our approach is very talent based. So that comes from our metrics, and that's the first thing. And then the key thing is then how that person actually gets onboarded into the team as well. So what's the conversation that takes place with their leader or their manager? How are they integrated with the others if you're going to have success? If you're a wealth management business, then looking across, okay, we've got this pool of clients, they're of A, B, C, D styles. Who is serving them? And I'm very big on that. As I said a few minutes ago, as an advisor, you're probably going to only be able to interact relatively easily with 40% of the types of people out there. That leaves 60% black hole that needs to be filled by someone else. And it might even be less than that, but I think you can generally cope with 40% of personalities. The other 60%, it just doesn't work. Doesn't matter who you are. And so that's the way to sort of optimize the business. Now, in terms of, Eric, in terms of sort of behavior makes profit or behavior drives profits, and we've always said behavior drives performance. But last year we did a research study where we applied our digital profiling process. So I'll come back to how that works in a minute, to all of the Fortune 500 company leaders. So we're able to get all their names from public records using AI, put them, essentially think of it, they're put into a spreadsheet, and then now we then send out using prompts to gather information from public data sources that creates a behavioral style for them. So they didn't have to go through answering our questionnaire. It's done digitally. We've picked up the metrics on them to identify their style. We've looked at the company profits, and what we got to see was there were 6 behaviors that the stronger those behaviors were in the team, the higher the company profit were relative to competitors in the sector. And so that's where we get to saying, behavior makes money, behavior is driving profitability. So it's very linked. And that's something that's quite revolutionary in this field, because I think we've always said everything in a business happens through people. If you've got the right person in the right slot, they're going to do better, and it's going to be more efficient and productive, etc. But here's the exact proof of it.
Is that something that you've published or you've made any of that information available?
There's a white paper, and it's in our website. So if anyone goes to the educational resources in our website, you will see it there, and it's under leadership, financial value creation capability. The whole process is outlined how we did it, and I continue to do it. And I don't think everybody likes the results. I had a private equity manager, I was talking to about it, 6 weeks ago, and he said, well, can you profile this team for me? And I did. And it was one of the worst performers as far as behavior is concerned. And, these guys, though, their strength was, as a leadership team, very relational, which is good. You need that. That's one part. But it was so loaded that way. But where it missed is some of the innovation and then the fiscal controls. And I know at some point there is going to be a problem with that business, because they're probably going to have a run up in revenue from connecting with lots of people through doing lots of advertising and spending. But has it all been fiscally rational? And what about the innovation? That business, I know, sits on one product. It's not a multi-product business. So yeah, great. Keep pumping the one product, but someone else could innovate ahead of that business. And so you got to understand there's a range of things that all work together, and we can see it. And that's the thing. It's like with some of the companies that were once the darling of the stock market. I was saying last year, yeah, on paper, you've got the right people, but if they don't all turn up to work all the time and stay focused, like Tesla, it's a problem. And, there are other cases of that. And so I think what we're doing with this is that counting tells you is historical. Behavior is going to be predictive. It's the one way of seeing forward. And then you look at everything else that's going on around it. Tesla, if you've got that leadership team and it stays very focused, they're going to do it. Lose their focus or make a bad people culture decision, not going to work. It's a very fine edge, but I think that this is what investors need to understand. And it's not saying, the people are bad. It's how do we help them with leadership development? How do we hold them accountable? How do we add in different roles to a team? And I think this is where we're seeing now so many businesses, Eric, out there, Price Waterhouse did a research study last year. 45% of CEOs of major companies think their business is at risk of not being in existence by 2030. Okay, so that's done last year. That's a 6-year runway. The issue is innovation, being prepared to challenge their own business model. Come up with a new idea, but how hard are you going to push that in terms of your business model, because that might threaten today's profits? It's a juggling act. It's not simple when it's a big business. But Intel, I think, is a classic case of where this is a struggle right now, and you can see the results. But all I'm trying to do is to provide or bring transparency to the people issues that are there to get better questions asked. I think, and that's what we can do.
How do you see, if I can call it behavioral science, or your field perhaps, evolving over the next decade or so?
The first thing is it's going to evolve a lot. I think more people are now understanding the connection of behavior to a business, to the business results, that measuring behavior brings visibility. That's starting to come out, the whole field of behavioral economics that I've been part of, which is really, the intersection of behavior and money, or psychology and money, is getting recognition. But behavior is the last frontier. What I would say is it is a highly fragmented market, and there's lots of consultants in there dabbling with it. More people are getting psychology degrees. It's there's more work being done inside companies. But I think the barrier to it is that people have to complete a profile. It's still a problem, in a financial services firm. Like, we've got one of our clients here in Atlanta that every time they've been growing by acquisition, every time they acquire another team, everybody's profiled. Then some of them start to deploy it on the clients. But let's say that over, 8 years or so, there's 3,000 people profiled. Okay, that's good. But they've got 25,000 families, which is 100,000 people, plus they have all the leads and prospects. Times that by 3. We're talking now a big universe sitting around that company, 400,000 people. And I looked at this and said, 18 months ago to my team at the end of 2023, okay, we've got a goal of hitting 100 million profiles completed by 2030. We'd had about 2.5 million completed at that time. We're growing. That's no small feat for complete startup in this field. But what if we thought about the goal differently and said we want 1 billion people in our databases by 2030? What do we have to do? We've got to go digital. That means we have to dust off the work that we started a few years before on building a digital scan product, which I referred to before around, the process of looking at all the Fortune 500 leaders. How can we remove all the problem for us is friction. Not every financial advisor wants their clients to have to complete a profile. It's not. I think some of them, they think, I can read the people, or it's just extra time. Don't need to do that. Really, most of it's I don't want to know more about myself, and I don't want people to know about me. That's a lot of it. But there's friction points everywhere with the process. Well, how do we remove that? The digital scanning process removes that. And so that's what we've done. And now we've got people, okay, I'm going to meet with A, B, C, D. They punch in what they need to punch in to the system, which is not much more than the name and where the person works, to get an identifier on them. And the system will go out there and construct it. Now, is it as good as the original full scan profile that has to be completed? No. but it's more than accurate. Because of the work we've done over 24 years, we're able to reverse engineer our own system to make it work. And we'll only make it more and more accurate over time. And I think that's an opportunity for exceptional growth. We've got a database sitting there in our company now of 400 million people. I don't have to tell you what we did with it. Everyone's got a profile. So that's where I think it can be a game changer. But I think it's still important to make this information understandable, easy to use for leaders. But I think that's thinking about it differently rather than thinking about it as hiring someone once and done or a little bit of coaching here and there or understanding a client. I think it's leaders understanding every person, heat mapping their whole organization, understanding every person that's there. Then you can start to see the blockages. That's the difference. If for marketing, okay, we're going to market to this 50,000 people. Why not know who they are? And you can do that pretty quickly. And it doesn't have to be complicated, right?
Yeah. And I can imagine so many use cases.
There's a lot of use cases.
Oh, yeah.
And I think it's taking the friction out of it, but it requires business model changes to do it. Okay, we've done that. So I suppose we just see, but I think there's a number of ways, I suppose, to change. This is one way of mass scaling hyper-personalization, I would put it, understanding people. But there are so many applications to use this kind of data in a meaningful way that's not just hiring and coaching people, which is important stuff. There are so many other ways this can be used because now we can predict how people are going to behave.
Are there certain types of industries or roles, businesses that you would recommend seek you out and give this a try?
I think once upon a time, I would have said that what we're doing, our model, particularly before we had the digital scan, was applicable really to relationship-based industries like financial planning. Okay, you want to you get a new client. They're going to be your client for 5+ years, hopefully for 20. Even accounting, any banking, anything that was long-term relationship, that would have been the market. But today it can be any industry because every business has got clients or customers. Every business has got an ecosystem that's more than just its employees, and that makes this valuable for everybody, including the government.
That's really interesting. I'm really intrigued. And, you mentioned a few things, the leadership, financial value creation that I will link to. You mentioned some books, and I am really interested in this. I'll link to this and those things in the show notes. I am going to be talking to one of your colleagues pretty soon, so there will be perhaps some follow-up that I can do on your business, and hopefully people will then listen to both of those episodes. But in advance of that discussion, are there places that people should go or ways in which they should seek out your business, but also you, Hugh?
Yeah, I think the best place, Eric, thank you for that, is going to our website at dnabehavior.com, and particularly there's the learning area. So that's a whole tab, and you can click through there and find, whether it's blogs, white papers, books. We also have a page, dnabehavior.com/start. That's a way to sort of start the journey of getting familiar with us. But pretty much everything is there on the website. And then also my LinkedIn account's got a plethora of things there that have been posted. Of course, all these podcasts, stories. So I think that they're the best ways to get in touch with what we're doing and the methodologies.
Well, thank you. I appreciate that. And there are a lot of other questions that I want to ask you. But as I said, I had the sense right from your first response that you were going to leave me wanting more. And I suspect anyone else listening to this conversation will feel the same way. So I want to say thank you. And maybe even we will talk again, depending on what makes the most sense and what's the most valuable use for your time. But
Thank you, Hugh, for joining me. I really appreciate it.
That's a pleasure, Eric. I've really enjoyed it. Thank you.
Hey, thank you for listening. I hope you got a lot out of today's conversation. If you enjoyed the episode, please take a moment to rate, review, and subscribe. And please share it with someone you know who'd appreciate this kind of information. If you want to bring this kind of thinking to your own business, check out mine at inboundandagile.com. We specialize in helping leaders with challenges around marketing, communications, and leadership so they can inspire real action in their people and audiences. Thanks again for listening, and I hope you'll come back for future episodes.